Equities, fixed income, currencies, commodities, good morning and welcome to Markets Today. It's a pretty good week. We should be looking forward to a number of events. Top of the list is the fiscal year is ending for both the national government and the county government, and also a number of corporate companies, most notably East African Breweries Limited. So a couple of developments coming up this week. It's also a week where we look forward to inflation numbers. We do have an expectation which we'll share later on. But it should make an interesting week. We should also look forward, as a viewer, should also look forward to a very profitable week, because we'll be giving you a number of trade ideas and trading strategies as the week progresses. But first up, we have Martin Muriki, who is a senior associate researcher at Standard Investment Bank. He's here with us. Martin is always a regular guest. We'll be a regular guest on Mondays. We'll be talking, he'll be here to give us a brief of what happened last week in the stock market, basically, and the other asset prices. We'll also be looking at the foreign participation levels, which was largely flat last week, but it should make an interesting discussion for the next couple of minutes and even for the entire week. First up, we want to look at some of the developments in the market and outside the market that will likely affect asset prices. At top of the list is there's a bill in Parliament that proposes to split mobile money platforms away from telcos. It's still in the early stages, and potentially what they're looking at, things like Safaricom splitting its M-Pesa platform and becoming a separate entity. Big there. What do you think?
Interesting one. Looks like the potential implications of these bills are not as punitive as we had thought. You have 6 months to actually comply. If you don't comply with some of the proposals, you could be fined anything up to 10 million shillings, give or take. But notice that this is actually coming out from a parliamentarian.
Yeah.
The Ministry of ICT, which has the mandate to oversee the industry, has actually not come up with any of these proposals.
Yeah.
Typically, if there was an influence and if you expected it to pass, it would have come from the anchor of the Ministry of ICT proposing a change. The fact that it's coming from an independent person is nothing to be ignored, but I think the likelihood of it passing in its current state is more or less unlikely to happen.
Yeah. I think in terms of the process, the legislative processes, when such a proposal comes, it has to go through 3 readings in Parliament. Then after that, it will go to the President for assent. The President can decline or not, send it back to the Parliament, they make an amendment. It's a long way before such a thing comes.
What I'm saying, I think the focus point beyond the legislative process, it's who's sponsoring the bill. If the bill was being sponsored by the Ministry of ICT, I think it would have seen the light of day. It's been sponsored by an independent MP. That reduces the likelihood of it passing, which makes it slightly immaterial if you are looking at the investment case of Safaricom or some of the players in that sector.
But do you think there's a value proposition in M-Pesa sitting on a standalone basis for the shareholders? Do you think?
It depends what the shareholders are going to remain holding.
Yeah.
What remains listed, because as a shareholder, you hold the company that's listed on the NSC. So does the proposal say then you have M-Pesa and then none of the attributes of M-Pesa come to the shareholder? It really depends on the structure. You could have M-Pesa as a separate company, then you have Safaricom as a holding company. As long as value is accruing to the end shareholder, really it's up to you to evaluate and see what remains. But then at this point, it's not very clear what the structures that are being proposed are going to look like.
Okay. The telco, for instance, is going to be a very interesting sector we'll be looking at this week on the basis of the fact that, one, there's a bill in Parliament trying to split mobile money platforms from telcos. We'll also be discussing a memorandum that I saw has been circulating from the Competition Authority to Parliament, suggesting that the market has no dominance, and to the extent that there's no dominance, then they've suggested a number of issues we'll be discussing with the telco. It's a very interesting discussion we look forward to.
Before we take the break, maybe there's also an interesting story on the government using the supplementary budget to pay for the Turkana power plant. It's interesting because it has helped the country avert sovereign risk. If they didn't pay, then some of the risks would have been our Eurobonds being called. So I think there was an important element to the push for the supplementary bill. And that also just indicates that we should expect more foreign borrowing in the next financial year.
That's a very interesting point you raised, because we want to also discuss sovereign risks, supplementary budget. There was a supplementary budget about a week ago, not only to pay Turkana Power, but also to pay release about 65 billion shillings that will go towards clearing of the pending bills, the famous pending bills. Let's have a small break, and then we'll come back. We'll get back to discussions with Martin Murigi to discuss more of these issues and also with my co-host, obviously.